Is Tesla worth it? And I don't mean the car, that you will decide for yourself. I'm talking about the fact that the Tesla stock has hit $500 per share this week, making the company worth more than General Motors and Ford combined, despite the fact that they make, I don't know, 15 million cars per year combined. But stock price and stock market is and should be about the future. So are things turning around? Are the shorts finally leaving the area and letting the future take over? I'm going to talk about this with my good friend Eli Burton of My Tesla Adventure, because it's time for Supercharged with Eli Burton, our weekly segment. Of course, don't forget that we have a few other monthly contributors to this channel now. Check out Rich Rebuilds, who's going to be here in a couple of weeks once again, the CEO of Faraday Future, Karsten Breitfeld, Sandy Monroe, and a few others. Only more reasons to subscribe to this channel, and if you already have, don't forget to hit on that bell notification icon so you don't miss anything moving forward. All right, so before I bring in Eli, let's just mention that this video and this channel is sponsored by Climate Exchange. Check out their Tesla raffle. That's coming up very, very soon. Don't forget, if you win, you get any Tesla you want, up to $195,000 in value. And even if you don't win, you'll still be contributing to a great organization that cares about the environment. So check them out, Climate Exchange. And you can enter the raffle by going to carbonraffle.org. The link is also in the description of this video. All right, without further ado, let's talk to Eli and ask him, Eli, do you think that Tesla is worth so much right now?
I do. In fact, I actually think Tesla is probably actually worth even more than their current market capitalization.
Well, how so? Tell me. I mean, they just went from like $200 to $500 like this. And, you know, just like I mentioned, you know, they make what this year, the last year, 2019, they made about 360,000 cars or so. That was a projection originally anyway. But you know, Ford and GM combined make, what is it, 15 million cars per year and sell. So how do you figure?
So yeah, let's talk about market value, market capitalization, and how the investment world values companies. So you're absolutely right. Ford and GM ship a far larger volume of product, but stock price is driven by what investors believe future is and the growth of the company is going to be. And Ford and GM are not growing companies. Tesla is, and Tesla is growing at a very rapid rate. And I think the reason why this year we had this opportunity to see a stock go from $220 a share to $500 a share, by the way, doing just exactly what they promised, right? They fell in like the lower end of their guidance for the year, but it's because earlier in the year, we had this massive short thesis that really was pushing public opinion about the stock and caused a lot of sell-offs that really weren't reflective of where the company was headed. So we had this artificially low valley that has then allowed this big pop that when Tesla had a big quarter in Q3, it was profitable unexpectedly, and then broke their delivery record numbers, releasing the Cybertruck, having actually a really large positive response to that, even in regards to how shocking the design was. When you put all these pieces together, you've got a company that's been an underdog. It's been a bit of a like, oh, they make a great product, but can they be profitable? You know, can they hit their delivery targets? And now that you're pulling away those downsides of, yes, they can be profitable, yes, they can beat their delivery targets, it starts making the bear case a lot stronger. And now you have a lot of media coverage of Tesla that's all of a sudden going very positive, including biggest one himself, which we talked about last time on the show, is Jim Cramer, and he's pumping the stock daily. Now he's also a shareholder now, so he's got an incentive to, but it's a completely different narrative about the company.
Yeah, and you know, my audience and you know that I don't do stock market. I don't think it's indication of anything at all. I think, you know, we say how, oh, you know, stock market is about investing in the future, but then one tiny little, you know, short-sighted news kind of can derail the stock, which I think has been happening a lot with Tesla. We've talked about this last time, that one of the reasons for the stock to be, you know, this high is because actually as a reason of short sellers actually having to get rid of the stock, get rid of their positions. Let's talk about it just a little bit. Remind our audience why that is contributing to Tesla's success on the stock market right now.
So the upside to short sellers when a stock does go up is short sellers to cover their positions, meaning once they've made it, short sellers are effectively betting on the stock price to go down. Well, as the stock price goes up, they lose more and more money. Well, when you have this awesome cycle, if you're on the bull side or the long side of a stock going up against a short seller, is as the stock price starts rising, short sellers either can hold on to their position and hope it goes down, or cut their losses, buy stock, and get out. But when you have a whole bunch of short sellers simultaneously do that, the net effect is they drive the stock price up even further. So there's been a large amount of covering of short positions. The people had short positions at $200, $240 a share, $250 a share. That all of a sudden, as the stock is going mid 300s, going into 400s, these short sellers were dumping their positions to cut their losses.
All right, so that's ironic, obviously, but it's going to be a while until Tesla is going to be able to sell, $15 million car a year. As a matter of fact, might be 5 to 10 years. Would you agree?
Absolutely.
So how is this possible that they're not making even a million, not even 500,000 cars a year, and the future is not going to hold 15 million cars a year anytime soon, and yet the value of the company is so much more than those two giant companies combined? I'm still trying to wrap my brain around it, because the math to me doesn't add up. I'm all for Tesla stock going up and Tesla being worth a lot, but mathematically I just don't quite get it.
So there's a couple reasons to it. One, Tesla is by far and wide the leader of the future of vehicles, right? Like, it is very clear to most people, at least that are following this industry seriously, that electric vehicles are the future. These legacy manufacturers are going to have to spend billions to transition into this game. And Tesla is way ahead of the curve. And that's not just on batteries and drivetrains and energy efficiencies, the core technologies needed to power a vehicle and manage energy usage. But Tesla's also got the entire technology component on top of it, of the software driven car. And when you add, I mean, that's just, let's go beyond just the user experience and the software that they have engineered that updates all the time and gets better and gets improvements. They have this huge technology built in-house called Autopilot that is by far the largest in the lead in any self-driving type technology put in the hands of consumers.
Well, so, and we've talked about it last time that, Tesla makes a lot of money on Autopilot, and probably will make even more money on just software, because Autopilot is software. And the legacy auto manufacturers really don't have much going on that front. However, the argument on the other side is saying, yeah, that's great that Tesla proved the point here, which I think they did. Right? If anything, this is a big signal to legacy manufacturers saying, you can't complain anymore about how nobody wants to buy these cars. You can't complain anymore that you can make a profit on this car. So what's up? Would you agree with that?
Yeah, 100%. And they've definitely put the world on notice now that you can no longer claim that it cannot be profitable to make electric cars. Now, any given company may not figure out how to make profit as an electric cars, but electric cars can make a profit. And that's part of the growth story too at Tesla. There's huge global opportunities for them to continue growth. They've just opened up Shanghai, which is actually a key point for this stock price. Is there is a lot of belief that there will be high demand, not just now, but ongoing, for sales of Model 3 in China, as well as Model Y. So that's a big component, I think, of why the stock is so high, that they're already delivering cars. So we can look at the next year's stock and the company's profitability and cash flow, and sales out of Shanghai are going to be part of that. And also too, they're not selling these cars at, proportionate prices. They're selling these cars still at US prices, assembled, manufactured in China. So Tesla's going to do great on this factory. They're just breaking down on Gigafactory in Germany to serve that market. And Tesla's proceeding very well with their plan to have a gigacenter on every continent. So when you look at all the investment they're making in manufacturing infrastructure, and the fact that they are still the only one really cranking out electric vehicles at any type of scale, and is able to do so profitably, and is going to be able to continue to decrease their costs as they continue to ramp up their machine. If you're looking at the future of vehicles, you want to know where to bet. Tesla's the place to bet. Like, there's nobody else who's where Tesla's position is in EVs.
Well, okay, so my second part of that, because I think I knew we would agree on the first one, right? But the second one is, I can make an argument saying, yeah, that's great that Tesla is doing so well on the stock market and overall. But, a company like Ford can put a few $1 billion, which is not that big of a deal, into this, produce a car, with Ford, for example, obviously they now launched the Mustang Mach-E. It's not going to be as great as Tesla, but, just like Android caught up to iPhone and kind of overtaking the global sales, same thing is going to happen with the legacy manufacturers. They kind of let Tesla pave the way, but now they're just going to quickly catch up. could and therefore Tesla won't be able to grow as fast and live up to
Let's
the.
address the quickly catch up point, because people keep saying year after year after year that legacy autos are just going to show up and catch up. And they really haven't. They have really not caught up to the core technologies that have empowered Tesla to be where they are. Right when a new automakers are still releasing cars that have this similar range to what Tesla's, early Model S's were from 2013. So it's not as simple as like they're just going to throw money at it and immediately catch up. I'd say the best show of something that got comparable was Porsche Taycan. And although they got the performance specs relatively close, they had to do so with putting in a transmission, and the energy efficiency is absolutely atrocious. And the thing gets 200 miles of range with almost 100 kilowatt battery. So, and Porsche threw billions of dollars at this vehicle. So it's really not so simple that they'll just catch up. But here's the other thing too. They've got to pivot technologies just to hold on to the existing market share that they have. Unlike Tesla, that is a growing company and expanding their market. So from an investment standpoint, you look at Tesla and say, okay, they've got a place to go. They're going to produce more cars. They've got ways to be more profitable. They've got more revenue streams. And then you look at Ford and it's like, okay, they're selling all these trucks today. They're going to have to start pivoting these vehicles to electric, just to maintain their existing market position. So they're going to have to spend billions just to ultimately hold on to the same number of sales they're currently making. So if you're an investor, that's not a story where you're like, oh, I'm going to double or triple my money. As a company who's, a little earlier on, a little higher risk, but has the ability to go from delivering 500,000 cars a year to millions.
I agree with you that the Tesla is definitely set up for the future, where the legacy manufacturers are just barely trying to figure out how it's done. I don't quite agree that that they're catching up to Tesla in technology. They are, but again, you and I live in the same area, in the Sacramento area, and once I moved out of the Bay Area, I realized that outside of the bubble, Teslas are really not that cool as we think they are. People prefer Fords and GMs to Teslas, and Tesla still has to catch up in the name recognition, in service. Obviously, there's a lot of arguments to be made that Ford has 2,000, dealers all over the place just in the U.S. and therefore servicing it is not a problem. The parts is not a problem. The phone calls not going to be put on hold for an hour or more. Like, there's still ways how Tesla is catching up to the legacy manufacturers. So is there still a case to be made that general public has not made the switch, recognizing Tesla as the leader in technology, because they just haven't thought about it?
So that's one of the things that you're right. Unless you've experienced the car, you have no idea how far in a lead the technology is.
Yeah.
Now, the places where the public are going to be aware of the difference, whether they realize it or not, is when they go out and buy an EV and they look at, what the ranges these things have. When they look at, like, let's say you're looking at, again, I know it's not a perfect example because this is a more niche car, but let's say you're looking at the Taycan versus the Model S, and you remove price out of it. They're going to see the difference in ranges. They're not going to know the underlying tech between the two, but they're going to know that one car gets a lot more range than the other. They may not be thinking about why, but as range falls into the buying decision, that's going to be important. And you're right, legacy manufacturer, where they have the lead currently, is not in their tech, and it's not in the quality of their product. It is in the maintenance and the infrastructure they have around it from being in business for so many years. So on the maintenance support side, yeah, that's something that Tesla's got a number of years to grow to ultimately catch up on. But what's going to drive consumer decisions of the future is going to be the quality of the product. And you're right about brand loyalty. So Ford F-150, and truck buyers have very strong brand loyalty to where they buy trucks. So that existing manufacturers have a great opportunity to retain that market, that when they get interested in electric vehicles, that as long as they make a good enough product, Ford should be able to keep a lot of those folks in their market. But timing is also important too. So it's going to be interesting to see what Ford rolls out prior to Cybertruck and how many inroads Cybertruck and Rivian make into their existing market shares.
All right. Now, what about the theory that I have that the stock price, the success of the stock price in the last half a year is not due so much to, a great delivery numbers, profits in Q3, the new factory. Granted, these are all great news, but we've had other great news that Tesla had that did not move the stock market like at all. And I thought they were very much equivalent news. What I believe is actually happening in that Elon Musk is actually coming back to being a reasonable, good leader of the company, not doing stupid stuff, doing a lot of smart stuff, under promising and over delivering rather than the other way around. Granted, he had that little dance at the thing that was kind of creepy almost. But and what do you think about that?
That was hilarious.
That was kind of hilarious.
His tweet about it was even better because he tweeted out the video and said NSFW, and then when somebody tweeted about it, he responded that he was just doing it to grow his PH account. I won't say the full name so YouTube doesn't get mad at you, but
yeah, that's yeah. I don't know what makes him do that, but this is way better than smoking weed at the Joe Rogans or sending out those, ridiculous tweets sometimes. I think the fact that he came back to being a reasonable CEO and being very conservative and goal driven and delivering on his promises is what moved the stock where it is now. How big of a role do you think his change in behavior has played in the stock being this much higher?
So I think the role his change in behavior had is important because although the antics can be entertaining to fans and for those of us who support him and, he's just being a human being, some of those things are not good to do for a company when you're affecting their stock price. So I think the real change in those behaviors getting eliminated, switching to a model of not overpromising, because I think Elon gets very excited and optimistic, and what should probably stay as internal goals get said publicly, and all of a sudden they become what the share price gets held to. I think by the change in Elon's behavior, it's just removed incidents that would drive the stock price down. It's not so much, I think, him being more level-headed is driving the stock price up. It's removing the moments where he would bring the stock price down, which means anytime something good happens, the stock just gets to go up. There is no detraction effect from different things that Elon does. So I think the net is it did contribute to it, but it contributed to it just by not having it as an anchor.
Yeah, no, I actually agree with that. Yeah, it's even better priced. All right, so like, where's the limit here? I mean, I personally, again, I'm not a stock market guy. I think 500 right now is a little more than I would expect from where the company's at. But where do you think this is going? Do you think there will be, it's reasonable to have another dip, or do you think that things are going to go well enough this year, and the quarter is going to be profitable, and deliveries are going to be, record setting, where the stock will continue climbing and climbing? What are your thoughts about that?
I think we'll continue to see a bit of a climb. I don't expect a large climb again until maybe Q2. And the reason I say that is they're breaking ground right now on Gigafactory 4 or 5. I don't even know what number they're on now. The one in Germany. So we know sales are going to be the lowest of the year in Q1. That's the way it goes in automotive. That's what happened last year. That's what will happen again. So Q1's not a great automotive sales quarter. So Q1, I think they may not be profitable from a combination of lower sales and a predictable quarter. And we know a lot of money is about to start being poured into that new Gigafactory. So anytime you have quarters where you're investing heavily in growth or infrastructure, operating costs are going to go up. Now, a lot of these costs are one time, such as the stuff that you pay when building a factory, but I'm not necessarily anticipating a profitable Q1, or if it is, it will be close. So I don't really expect a lot of movement in the stock going in Q1, but as we move into Q2, Q3, Model Y deliveries start ramping up. I think when those ultimately come out, probably ahead of the initial promise schedule, again, another one of those under promise, over delivers. And I think when we see some of the updates that are going to come this year in Tesla's battery technology, again, that Maxwell acquisition, I think there's something big they have planned for that. And when we see the next level of autopilot rollout, which we're currently on the full self-driving preview, but once that turns into street level autopilot, I think you're going to now see another huge surge, one in full self-driving sales, because now there is a huge feature gap between just autopilot and full self-driving, and the amount of attention it's going to bring to Tesla being the only vehicle out there that has street level autopilot. I think it's going to be huge for the brand, huge for public perception, and be a big marker for the stock and sales.
I think I think I'm more optimistic on the Gigafactory 4, the one in Germany, because much like Shanghai factory, most of it was not direct cash investment. It was mainly loans and incentives from local governments. Not going to expect much from German government to help Tesla out, but nevertheless, I don't think there will be that intensive in investment. Plus, I think at this point, hopefully, Wall Street will say, "Oh, okay, they're spending this money. We know now that when they spend the money in the new factory, boom, lots of profits come flying back at us in just a couple of years." So there's got to be some adjustment on their end. But all right, well, listen, this is the second video out of the last 3 weeks that we made about the Tesla stock, because things have been climbing. So to me, even though I personally think it's a little unreasonable just in my head and math and all that stuff, I'm having a good time with it, because I mean, this is how you prove. I mean, I always knew Tesla was going to do well, even back in the day, because that's why I bought one in like 2012. But now I'm rooting for them also because this is an indication to the rest of the market saying you have nothing to complain about. You gotta just have to do it at this point. So that's why I absolutely love it. But
and Tesla is still the largest driving force to push the legacy auto manufacturers into EVs. Tesla is going to have to continue to steal sales from these folks before they're going to feel the pain enough to accelerate electric vehicles as much as we need them to as a society. So every time Tesla wins, every time Tesla has another big quarter, it's just more pressure on legacy to get moving. And it also creates more room for when legacy doesn't get moving, that these new entrants can start selling their products. So it's going to be an exciting time.
I absolutely agree. All right, let's talk about some exciting times in your part of the land. I know you got your podcast going on, and there's a link in the description of the video. But also, tell us a little bit about this, as I've had this copy for a while now, and well, the posters on your wall, actually.
Actually, yeah, I got posters of both of them behind me. So yeah, we are actually half sold the entire run of episode 2 of the Adventures of Starman Big Oil Strikes Back. So the first edition print of that will probably run out in the next couple months based upon how demand's been going. But yeah, so I made this awesome comic book series. You can find it at theadventuresofstarman.com. There's even signature edition options where I'll sign it, and you can also have it signed by my friend Starman. So that's a really popular option, which, by the way, if you do choose to have it signed by Starman, it will actually come with a photo also autographed by Starman. So if you're getting it for a kid, someone in your family who's a big fan of this, that's the real gift giver to get.
All right, you got all of the connections. All right, my friend, listen, this is definitely a conversation we're going to continue. I'm looking forward to it. This year is going to be exciting. So I will see you next week for the next installment of our segment. But other than that, have a great the rest of your week.
Sounds great. Thanks, Alex.
All right, guys, this is exciting. We're almost never have these conversations ahead of time, so our conversations are very much genuine here, because we're just having it on the air, and I think that's the benefit for you guys. I'm excited. Let me know in the comment section, actually, what you guys think about the stock price. Do you think where it's at? Have you bought it? Maybe have you sold it? I don't own any stock. People ask, well, do you own any stock? First of all, I sold it a long time ago. I originally bought it at $99 when everybody was telling me I'm an idiot and it was too high. But obviously, now that I am an independent journalist, I cannot own stock in automakers. That would not be very unbiased of me. So I'm not planning on buying it, though. When it was at 200, 6 months ago, that definitely looked pretty tempting. All right, by the way, a great thank you to one of my newer Patreons, Chris. Thank you so much for joining my Patreon community. That and my sponsors is one of the only ways how I pretty much make a living here, and that's why I'm able to do this every day and go to different events like CES. You probably noticed I got a lot of CES videos already published. There will be quite a few of them because that was a lot of fun, a lot of new electric cars and electric cars that you've already seen before, but made a lot of progress towards production. So stay tuned for that. And really, only more reason to subscribe to this channel. And if you already have, then don't forget to click on that bell notification icon so you don't miss anything moving forward. All right, looking forward to your comments. Other than that, see you guys next time. And remember to stay charged.